Welcome to XM.com. I'm Christina Marujos, and you're watching today's Daily Market Comment by Mario Sachikiriakos. With the Fed having almost locked in a November taper announcement, the question now is whether Chairman Powell will use next week's policy meeting to give the markets an early warning. The question might boil down to what the upcoming inflation report shows. Forecasts suggest both the headline and core CPI rates inch down slightly in August to reach 5.3% and 4.2% respectively on a yearly basis. The main variable for the Fed will be whether inflationary pressures remain concentrated in a handful of reopening-linked sectors or whether they have started to broaden out. Any signs that price pressures are becoming more entrenched will likely boost the dollar as traders bring forward the Fed's normalization timeline but hit dollar-denominated assets like gold. Of course, this will only affect short-term trading. Ultimately, it doesn't matter much whether the Fed will push the taper button in September, November, or even December. It's only a matter of time. The crucial part for FX markets is whether interest rates will be raised next year, which seems realistic in an environment of sticky inflation, especially if Congress makes good on its spending promises. In the broader market, U.S. equities had a mixed performance on Monday. The Dow Jones rose by 0.8%, but the tech-heavy Nasdaq closed marginally lower as value plays outperformed growth. The S&P 500 was somewhere in the middle, advancing by 0.2% to snap its recent losing streak. In the commodity arena, oil prices are trading at 6-week highs after Hurricane Nicholas made landfall on the Texas Gulf Coast, threatening to throw drilling sites and refineries that are still reeling from Hurricane Ida into more disarray. In the FX spectrum, things are relatively quiet. The U.S. dollar surrendered its recent gains as the mood in equity markets improved and is currently on the back foot. Meanwhile, the British pound is on the offensive after some encouraging job numbers. There's a risk of a spike in unemployment now that the furlough program is being tapered, but the record number of job openings in the economy suggests any spike won't last long. Finally, the Australian dollar is under fire today after Reserve Bank of Australia Governor Lowe reaffirmed his central bank won't raise rates until 2024 and questioned why markets are even pricing in rate hikes before that. Thank you for watching today's Daily Market Comment here at XM.com.